Hello everyone and welcome to my channel. Is a real estate crash coming? The question of whether a real estate crash is imminent has been on the minds of many investors, homeowners, and prospective buyers. The global economy has faced significant challenges in recent years, and the real estate market has experienced dramatic shifts. To understand the likelihood of a real estate crash, we must consider various economic indicators, market trends, and expert opinions. Economic indicators and market trends. Several economic indicators suggest a complex picture of the real estate market. Rising interest rates, increasing home prices, and economic uncertainty are key factors to consider. In 2023, the Federal Reserve raised interest rates to combat inflation, leading to higher mortgage rates. Higher borrowing costs can decrease demand for homes, as fewer people can afford mortgages. This, in turn, can lead to a slowdown in the housing market. According to the National Association of Realtors, NAR, the median home price in the U.S. increased significantly during the pandemic, driven by low interest rates and high demand. However, the pace of price increases has slowed recently, suggesting that the market might be stabilizing. While a slowdown in price growth is not a crash, it could indicate a shift towards a more balanced market. Housing supply and demand dynamics. The supply and demand dynamics in the housing market play a crucial role in determining its stability. During the pandemic, there was a significant mismatch between supply and demand, with limited housing inventory and high buyer interest driving up prices. As of mid-2023, housing inventory has begun to increase, but it remains below pre-pandemic levels. A report by Zillow indicates that while there has been an increase in new listings, the overall housing supply is still constrained. This imbalance can support home prices in the short term but also makes the market vulnerable to shocks. If supply continues to increase while demand weakens due to high mortgage rates, prices could decline, potentially leading to a crash. Economic uncertainty and consumer confidence. Economic uncertainty is another critical factor. The global economy has been affected by several issues, including geopolitical tensions, supply chain disruptions, and fluctuating energy prices. Such uncertainties can impact consumer confidence, leading to reduced spending and investment in real estate. When consumers are uncertain about their financial future, they are less likely to make significant investments, such as purchasing a home. According to a survey by the Conference Board, consumer confidence has been volatile in recent months. Fluctuations in consumer confidence can lead to changes in the housing market as potential buyers delay or cancel their plans to purchase homes. A prolonged period of low consumer confidence could contribute to a decline in housing demand, increasing the risk of a market downturn. Expert opinions and historical context. Experts are divided on whether a real estate crash is imminent. Some analysts argue that the current market conditions are not indicative of a crash but rather a market correction. For instance, Lawrence Yun, chief economist at NAR, suggests that while the market is cooling, it is not experiencing the speculative bubble seen in the mid-2000s. He notes that lending standards are much stricter now, reducing the risk of a widespread collapse in home prices. Conversely, some experts warn that certain markets may be overvalued and susceptible to price corrections. A study by CoreLogic identified several metropolitan areas where home prices are significantly higher than the long-term trend, suggesting that these areas could experience more substantial price declines if economic conditions worsen. Conclusion: what lies ahead? While there are signs of cooling in the real estate market, a full-blown crash akin to the 2008 financial crisis seems less likely. Stricter lending standards, ongoing demand, and limited housing supply provide some support to the market. However, rising interest rates, economic uncertainty, and regional market imbalances could lead to localized downturns or a broader market correction. The real estate market is inherently cyclical, and periodic adjustments are a normal part of its dynamics. The critical question for investors, homeowners, and prospective buyers is how to navigate these changes effectively. Given the current economic environment, should you be preparing for potential downturns or continue to invest with confidence in a resilient market? Comment what you think. Don't forget to like and subscribe. Thanks for watching.